Hey everybody, today is June 9th, and today we're going to talk about the price of Bitcoin. We're going to talk about whether Bitcoin can avoid a bear market and continue up higher, or whether this is going to fail to hold that support and we might see it plunge lower. Before we begin, please read the disclaimer and you can pause this video as you read it. Okay, so as you probably are well aware, Bitcoin has been in a massive drawdown of more than 50% since April, right? So we had this huge plunge down. There's a lot of different catalysts. First is that Elon Musk, of course, stopped accepting payment for Tesla using Bitcoin, citing environmental concerns of Bitcoin mining. Also, there was more FUD out of China, China cracking down on miners and perhaps trying to strengthen their ban on cryptocurrencies as usage as payments within the country. They're trying to implement their own digital yuan, right? Their own digital currency, and it's not going very well. So they might see Bitcoin as sort of a nuisance or a threat in their way. But there are things that are starting to turn around, right? First is that Elon Musk had formed a alliance with different Bitcoin miners, it's the Bitcoin Mining Council, and their goal is to create more sustainable Bitcoin mining, right? And I don't know if he's going to involve Tesla solar panels or whatever, but the fact that they're trying to change the view as it pertains to Bitcoin mining, because right now there's a lot of one of the main arguments that people say against Bitcoin is that it consumes way too much energy. And it just wastes a lot of energy and like pollutes the environment, right? So if we can change the image of Bitcoin towards more mining is more sustainable and actually good because it incentivizes miners to find energy that's more renewable and sustainable, then that's going to change that. It's going to take that argument out of the water, right? So the fact that they're forming a council, an alliance between different miners, is actually a good thing for the image of Bitcoin and for like the mining in general, right? The second thing is I think people are starting to see like China has been like trying to crack down on Bitcoin and cryptocurrencies for many years now, right? Since like 2013, and always like Bitcoin always like prevails and overcomes, right? Because you think is you can't really ban Bitcoin, right? Bitcoin is independent of countries. There's no sovereignty, or it's decentralized. So there's no one can ban Bitcoin, right? It's peer to peer. No one can stop you from using it. Nobody can seize your Bitcoin, right? If you have the private keys, you control your Bitcoin. So I think that people are starting to see the power of Bitcoin. That nobody can really censor or confiscate it or ban it entirely, 100%, right? And I think Bitcoin will recover, and it does seem like it's finding a bottom. So another thing is that recently El Salvador adopted Bitcoin as legal tender. So it's actually a legal currency within El Salvador. So this is really a big deal because this is really the first country that's ever done this. And who knows, we might see more countries do this. And this is a smaller country, but maybe we'll see a bigger country like the US or a European country, or maybe an Asian country, right? Like Japan or something, adopt Bitcoin as a currency one day. It probably will take a lot longer, but the fact that we're seeing at least one country start, maybe we'll see a domino effect and see more countries follow this pattern. Just like we're starting to see more companies put Bitcoin on their balance sheets, we might see more countries adopt Bitcoin as legal tender, and that would be really great for not only the development, but of course the price, as we're all investors and traders in Bitcoin and other cryptocurrencies. And yeah, so those are the fundamentals in the short to medium term, or over the last couple of days. Let's look at the technicals, right? We said many times how important it is for us to hold our support levels, which are these moving averages, the silver line, the 50-day, the 100-day, and the 200-day simple moving average. And we also have our Fibonacci line, which is these horizontal lines, right? Let's talk about the moving averages, right? Ever since we had this breakout from October, over here, we stayed above the 50-day simple moving average, which is the silver line, right? That held that strong support. Every time it came down and tested, right, we bounced and held strong. Unfortunately, we broke through in April, and this really started the downtrend, right? And we not only broke through in April, we came down, and we also found some support temporarily on the 100-day, which is our midterm moving average. Unfortunately, we weren't able to reclaim the 50-day, and so we plunged below, and then we didn't hold the 200-day, which is a long-term moving average. And the 200-day is really, really important because we look at the past of Bitcoin. In the past, we always held above. In our last major bull run from late 2015 to 2017, right, this massive rally, we always stayed above the blue line, right, which is a 200-day simple moving average. And this is not just a important long-term moving average for Bitcoin. This is something that institutions look at when they're charting like stocks, right, and precious metals and other major assets that they trade. So the fact that we've always held above the 200-day is really important, because this is an indicator that there's going to be strength to continue higher, right? To find momentum going higher. We did come below at one time in mid 2016, but we never closed. We just wicked below, right? We never closed below it. So the fact that we're spending so much time below the 200-day is something that really worries me. And what I want to see is for us to reclaimed above the 200-day as soon as possible, right? Because what we're also seeing is that we have a bearish cross of the short to mid-term moving averages here, and that's not necessarily a bad thing if we can recover quickly and push the price above, right? But the fact that we're going to see a death cross soon, which is a 50-day crossing a 200-day here, and it's going to happen within the next couple of days. However, this is not necessarily a bad thing if the price can get above the moving averages, right? If we can get above the moving averages, we'll basically change the trend of the moving averages and basically make them move up again into a more bullish posture, right? But we don't want to see this thing cross, because that's just going to give more momentum to the bears to push the price down lower, right? I talked about how in our past these Fibonacci levels are really important. As just a quick summary, even all the way back when we had the crash in the pandemic, right? We came up here, we have some resistance around this Fibonacci level, we held, went up to the next level, and we basically went sideways for 3 months, trending this Fibonacci line before coming up higher, trending the next level, pushing down, ranging between these levels, and then pushing up higher again, right? And then when we challenged our previous all-time high set in 2017, we found some resistance here. We came down, found support off this Fibonacci support level. Then we broke through, went up a little bit too quickly, came down, retested this Fibonacci support level, held it, and then pushed up higher, came down, retested, held, and went up. And this is where we started to run into some trouble, right? Around 65,000. This area, we found strong resistance, came down, retested, found support here, but unfortunately we didn't find support for their time, right? I always say, like, the more we retest certain levels, whether it's resistance or whether it's support, the more times we test it, the more likely we are to break through, whether it's to the upside or to the downside. So we tested this 2 times already, and the fact that we tested it a 3rd time, we ended up breaking below. Now here's the important level, right? 30,000, which is where we had found support over here, or back earlier this year. This is our first major correction of 2021, right? We found support here, and so that's why we're finding some strong support around 30,000, right? We see these wicks. These are buyers coming in when the price comes down. Now, here's the thing. This is really important. We must hold 30,000. I've said this in the last couple of videos, how if we don't hold this Fibonacci level, we will plunge down to 20,000. And in my opinion, this whole move is over, right? We are in a bear market, but right now we have a chance to save the price of Bitcoin. We have a chance to save us from getting into a bear market, right? Is Bitcoin going to enter a bear market? If we can stay above 30,000, Bitcoin has a chance of continuing higher, and this will end up being just a mid-cycle pullback, right? And here's the thing. Let's look at the line chart, and you can see that we actually have higher lows, right? The line chart looks at the daily closes, right? So even though right now in the short term we do have lower lows here on our daily closes, from when we first pulled back our first correction in in January of this year, we actually closed about lower, right? Obviously here. So we have slightly higher lows, which is actually a good thing, right? But what we want is, of course, for us to continue closing higher. And so right now we're seeing a nice bounce in the price over the last 24 hours. A lot of it is off the news of El Salvador, right? But I think that the momentum and all the sentiment is starting to flip bullish again, right? People are starting to see that, Elon Musk, yes, remember Elon Musk came in around here, right? And so we saw a huge push up. So we're basically just faded everything after he said that he's not accepting Bitcoin. And who knows, he could change his mind in the future. But let's just assume that for now he's not accepting Bitcoin. We basically just faded this entire rally since he said that he was going to accept Bitcoin. So, and keep in mind that this entire rally from October all the way up to January was without Elon Musk. So we had this huge move of let's see, of over 300% without Elon Musk. So if we can hold this level and we can continue higher without Elon Musk, right? So I think Bitcoin will be fine. And I think China, people are starting to realize that China can ban Bitcoin 100 times over like the last 8 years, but they can't completely ban Bitcoin, right? It's gonna be fine. And other countries will adopt Bitcoin, and it's not necessarily a bad thing, right? There's a lot of mining hash being centralized in China, right? Like 60% of or something of the mining power is in China. So the fact that China's trying to crack down is actually a good thing in the long term. In the short term, it's gonna take a hit on the price, right? But in the long term, all that hash power is going to be distributed around the world, and it's going to make it a lot harder for miners to collude and try to take over the network, right? I mean, it's already hard enough to do that, but the fact that we're starting to see China crack down, we're going to start to see miners pop up around the world, and we're going to see the mining power just being distributed more evenly, and that's just going to make it even more decentralized, right? And so in the long term, this is actually a good thing. What's happening in China, the crackdowns on the miners, is actually a good thing for Bitcoin, the fundamentals, and for the price. So in my opinion, this is not a financial advice channel, but for me personally, I have been buying the dips, slowly buying as it comes down, right? Because I have strong convictions that I believe that this is just a temporary pullback, a mid-cycle pullback. And I'll explain a little bit more when I look at the macro charts and we compare it to the previous cycles. But I do think that $100,000 and beyond Bitcoin is still in the cards for this year. Now before I get into the macro picture, let's look at the daily chart, right? Obviously, we're seeing a nice bounce. We held this Fibonacci support level. These 3 wicks, strong buyers coming in, right? Let's look at the MACD. MACD, I said that I want to see us push above into positive territory, right? Because what we've been seeing over the last months is our oscillators coming down, right? The MACD coming down. Not only the MACD, but also the RSI. We've seen the RSI make just lower highs, right? Lower highs, lower lows, while the price of Bitcoin has been going up, right? And so when that happens, that's a bearish divergence. That means that the buying momentum is starting to fade. And of course, on a technical level, we saw this thing break down pretty hard, right? But right now we're finding some strong support, and we have a bullish cross here, and this direction of the momentum starting to push up higher, and we have green histogram bars. Now we want to see this continue to develop and to push up higher into positive territory, right? Also with the RSI, we had oversold territory a couple of days ago over here, and this was a good time. This usually when it's very rare that Bitcoin goes below 30 in the RSI, right? And usually historically it's a good time to buy. So I did buy over here. Of course, you got to make your own decision. This isn't a financial advice channel. It's entertainment and analysis. But we're starting to see the trend move higher, which is good, right? But we want to see it continue higher and break this downtrend by going back above 50, right? Because we get above 50, we're going to see the momentum start to shift to the upside, right? So looking at the fear and greed index, still a lot of fear, right? 14. We've been below 20 for a while now, right? And this is we haven't had this much fear since the pandemic. And of course, historically, pandemic was one of the best times in the history of Bitcoin to buy Bitcoin, right? Because then you had this incredible run. If you bought Bitcoin when the fear was at like where we are now in the pandemic, I mean, just look at like even up to now, this is 798, about pretty much an 800% increase from the pandemic low, right? And by the way, up to where we were in the peak in April, 65,000, that's 1,500% return, right? So the fact that we plunged 50%, if we look at the longer time picture, it's actually not that like out of the ordinary, right? I mean, we've basically risen from the pandemic low, again, roughly 1,500%, right? 1,500%, and we have a 50% pullback. Is that really like out of the norm? Is that really that bad? I don't think so. And I think this could just be something where, like I said many times, 6 green candles in a row. I mean, we haven't been this there hasn't been this much parabolic movement since 2013, right? And even then, we had here. This is the last time we had 6 consecutive monthly green candles in a row, and then we followed by 2 red monthly candles. And we had a green candle here, but look at how it came down pretty hard, right? And I think we're seeing a very similar pattern here. 6 consecutive green candles, right? Oh, by the way, this is in 2013, right? 2013, and this was happening around the same time where we peaked in April. Similarly, peaked in April, 6 consecutive green candles, followed by 2 red candles, and right now we're still in the middle of June, and we don't know if this is going to close green or red. But if we do close green, I think we'll see something like this, where we have 2 peaks, and this could be a mid-cycle top that has a strong correction. This was an 80% correction, right? And right now, let me just double check. Yeah, it's about 80% correction. This is a 50%, slightly more than 50% correction. So compared to this is not as bad as what we saw in 2013, but look at how we reclaimed our previous high here and push up even higher. So I'm thinking we can probably see something similar happen this year, right? There's been a lot of FUD recently, a lot of bearishness that scared a lot of people out of the markets, right? A lot of newbies also entered during this huge run up, right? So I think that we're just seeing a lot of the washing out of the weak hands, flushing them out, and the smart money is accumulating on these bottoms, these dips. And we're gonna push up higher and see Bitcoin hit over 100,000 by the end of this year. So it's always good and important to look at the longer time picture, right? I mean, look how parabolic we were. But I just want to reiterate, like, we're still looking good if we look at the overall picture, especially if we compare it to the Fibonacci lines, right? I mean, let's look at these Fibonacci lines. Strong support off the 30,000 level right here. Even at the macro picture, right? We're coming down, but we're finding strong wick support over here. Some buyers are coming in, pushing up the price higher, and we're just finding trending along this Fibonacci support level. And I think that when we look back in a couple months, we're gonna see that, hey, this was an obvious buy, right? We come down and we touch this Fibonacci support level. Man, why didn't I buy from there, right? Of course, I'm not telling you to go and buy, but what I'm saying is that trying to be transparent. I've been buying. Yeah, I bought a little too early around here because I was optimistic that we would hold this level. Unfortunately, we didn't. Fell down below, came down a lot harder than I expected, and I think most people did not expect Bitcoin to come down that hard. But if we just take a step back and we look at the longer picture, the bigger time picture, right? The fact that we went up so quickly, 6 consecutive green candles, it starts to make sense that this could be a logical thing, right? A 50% pullback after a huge 1,500% move basically from the pandemic lows, 6 consecutive green candles, and just like 2013, maybe not an 80% correction, but 50%, right? Before continuing higher. So it's starting to make a little bit of sense, like that could be what we've been seeing. Of course, nothing is guaranteed and we have to take this day by day, but that could be a possible scenario. And I want to just finish this video by going through some of the indicators we've been talking about. 2-year multiplier, right? We see a nice push down higher. Notice how the reason why I think that this is just a mid-cycle pullback and not necessarily a top is that we usually, when we look at the signs of a top in this 2-year multiplier, this indicator, the top is signaled when we've crossed this orange line and we come in this territory where it starts to become shaded, right? And this is telling us that the price is starting to get a little bit overbought right now, and you probably want to start taking profits in this area, right? Shaded. We haven't even broken this area now. We just consolidate it and then come down lower. And as we consolidate, the orange line continues to go higher, and that's creating a higher ceiling, right? Because when we hit the ceiling earlier this year, we hit the orange line earlier this year, right? Earlier this year, we couldn't break through, and we just basically rolled over. But as we continue to go sideways, this line continues to go higher. So this is giving us not only a higher ceiling that the price can go up to, but also to break above, because we always break above and overshoot before plunging into a bear market, right? So right now that the ceiling is around 92,000, and we're still about 50% down. So by the time we recover, this orange line will probably move above 100,000. And if we overshoot like we have in the last cycles, 3 cycles here, and here, this is our mid-cycle right here, 2013, right? And notice how in the mid-cycle in 2013 that we talked about, right? Right over here, right? 2013, we had right over here. We went over. It was basically signaling over bought, right? In red shaded area. We haven't even done that yet. So in my opinion, that's really bullish, right? I do think that there's a lot of room for us to move up higher, not only to hit this orange line, but to overshoot it like we have in the last 3 cycles, right? So I'm thinking maybe 300,000 is not out of the cards. Pi cycle top indicator. Obviously, I'm gonna be very honest. I thought that we could find strength and push up higher. I said that this could be a false positive. Now I was wrong, so I'm gonna be honest and admit that I was wrong. Okay, this ended up being correct. So obviously that's giving me more conviction that we can use this indicator going forward, because remember, this indicator was created in 2019 after all of these already peaked. So for me, I had reservations whether this was made to fit so that it was made to fit nicely, but I didn't know if it could predict the future. Obviously it was correct, so I'm going to use this indicator going forward next time. So yeah, I'm willing to admit that I was wrong, right? I thought that we could hold above when we crossed, but we didn't when we plunged 50%. So if I had just listened to this indicator, obviously I and a lot of people would have made a lot of money if we timed this perfectly, but hey, not a perfect trader, right? And I always say, like, trading is a journey and nobody becomes a master of trading. It's, you can be really good at trading, but nobody ever 100% can master the markets, because the markets are, it's not just logic, it's also human emotions, right? And we're seeing this on a chart right now. But just to get back to this chart, so we see it cross, but when we see it recover, we see that the green line goes above the orange line, and that's usually a good time to buy back in, right? And so right now, that's what we're seeing. We saw a cross, a bearish cross here, and saw the line signaling us to get out of the market, right? And it peaked within 2 days. Now the green line is above the orange line, which is actually bullish. So we do follow a similar pattern like we did in 2013. We should see the price recover and go up higher, and maybe we'll make another peak by the end of this year and get another signal to get out of the market. And obviously this indicator, like I said, to me is more valid now that it has accurately predicted the future instead of just being made to fit the past. So I will be using this indicator to help me time my exit when Bitcoin continues to recover higher and goes above 100,000 by the end of this year. Puell multiplier. Obviously, if we look at the past, we saw that oversold moments, time to get out of the market was when we penetrated this shaded area, right? We haven't penetrated that area yet. So still a lot of room to go up higher. Golden ratio multiplier. Peak was signaled when we touch these dotted lines, right? We haven't even touched the dotted line yet. The dotted line right now is at $144,000, and we're still like in this corrective period, right? So by the time we move up, this dotted line will be a lot higher. So how high will it be? Who knows? Probably over 200,000, maybe even 300,000. So a lot of room, a lot of upside, potential upside before this thing signals the top, right? Z-score, overbought. Overbought when we penetrate this area, right? So we're still in this corrective period. Still a lot of room to go up higher, right? Before it signals overbought, right? So there's still a lot of upside if we look at all these indicators, right? All these indicators, and of course stock to flow, everybody's favorite. When we saw the cycle peak, right, and it started to signal overbought and telling you to sell, that's when we broke above this horizontal line, right? But we still haven't broken above it yet, and so there's a lot of room to overshoot, probably into 200,000-300,000 range. So in my opinion, this cycle is not over yet, and there's still a lot of room to go up higher, right? Things are very oversold in the short term, so I think that overall, I'm more bullish now than I am bearish, especially if we can hold this 30,000 level, right? That's what I want to see us hold at the bare minimum. Then we want to see us to get above this blue line, our 200-day simple moving average line, and then we'll probably see a lot of resistance around here, 47,000, which is our Fibonacci resistance level. But once we break this level and continue higher, I think that there's going to be so much more momentum to the upside, right? And we just always look at, it's easy to get scared when we see the price come down quickly, but we want to look at the bigger picture, right? If we do see something play out like 2013, right, similar price action and push up higher, this thing can go up a lot higher. And of course, just going through all these indicators I just went through, everything is suggesting that in the short term we are oversold, and there's a very long way higher before these signals start to tell us that we're overbought and we should probably get out of the market. So in my opinion, still a lot of upside, still a lot of hope that Bitcoin can continue higher and avoid a bear market. So yes, I do think Bitcoin can avoid a bear market, but we want to see the price action continue to form this space and push up higher. And I'll definitely update you guys going forward as the price action develops. Thank you for watching this video. If you found it useful, helpful, informative, please like this video, leave a comment below, and subscribe for updates. I appreciate all your support. Thank you again, and have a great day.